Imagine if every country in the world suddenly had to choose a single currency to trade with each other. Oil from the Middle East, electronics from Asia, cars from Europe, and food from South America would all need a common financial language. Surprisingly, that language already exists. It is the United States dollar. Today, the dollar plays a unique role in the global economy. It is not just the currency used inside the United States. It has become the dominant currency for international trade, global finance, and central bank reserves. But how did one country's currency gain so much power across the entire world? The answer is not based on a single event. It is the result of history, economic strength, political influence, and trust built over many decades. To understand why the dollar rules the world, we need to go back to a moment in history when the global financial system was being rebuilt. After the Second World War, many economies were damaged and unstable. Countries needed a reliable system that could stabilize international trade and rebuild global markets. During that time, the United States had one of the strongest and most stable economies in the world. Its industrial production was enormous, its financial system was powerful, and it held a large portion of the world's gold reserves. Because of this economic strength, the United States dollar became the foundation of a new global monetary system created during the Bretton Woods Agreement. Under this system, many countries connected their currencies to the dollar, while the dollar itself was backed by gold. This arrangement created stability and predictability in international trade. Governments, businesses, and investors trusted that the dollar represented real value because it was tied to gold and supported by the world's most powerful economy at the time. Although the gold standard eventually ended decades later, the global trust that had already formed around the dollar remained in place. By the time the gold link was removed, the dollar had already become deeply embedded in global trade and finance. Over time, international trade became increasingly dependent on the dollar. Many commodities, especially oil, began to be priced and traded in dollars. This created what economists often call the petrodollar system. When countries import oil or other critical resources, they often need dollars to complete the transaction. This creates constant global demand for the currency. Even countries that rarely trade directly with the United States often hold large reserves of dollars because global markets operate using the dollar as a standard unit of exchange. This means that companies, governments, and financial institutions across the world rely on access to dollars to participate in international trade. Another major factor behind the dollar's dominance is the size and stability of the American financial system. The United States has some of the deepest and most liquid financial markets in the world. Liquidity means that massive amounts of money can move quickly in and out of markets without causing dramatic price changes. Investors from around the globe purchase American government bonds, corporate bonds, stocks, and other financial instruments denominated in dollars. These markets are enormous, highly developed, and relatively transparent compared to many alternatives. For large institutions, pension funds, and central banks managing hundreds of billions of dollars, this stability and liquidity are extremely attractive. The United States Treasury bond market in particular is often considered one of the safest places in the world to store capital. Because of this, many governments and institutions prefer holding dollar-denominated assets as part of their reserves. Central banks around the world maintain reserves of foreign currencies to stabilize their own economies. These reserves help governments manage exchange rates, respond to financial crises, and maintain confidence in their monetary systems. A significant portion of these reserves are held in dollars. When central banks choose a reserve currency, they look for stability, reliability, and global acceptance. The dollar has historically provided all three. Trust also plays a massive role in the dominance of the dollar. Money only works when people believe it has value. That belief depends heavily on confidence in the institutions that support it. The United States government, its central bank, known as the Federal Reserve, and its legal system have built a long-standing reputation for protecting property rights, enforcing contracts, and maintaining relatively predictable financial policies. This institutional framework strengthens global confidence in the dollar. Investors and governments feel more comfortable storing wealth in a system that has a strong legal structure and long history of financial reliability. Another reason the dollar remains dominant is the absence of strong alternatives that meet all the same criteria. For another currency to replace the dollar, it would need an enormous economy behind it, highly liquid financial markets, global trust, and a stable political and legal environment. Some currencies have attempted to challenge the dollar's dominance. The euro emerged as a powerful currency when many European nations created a shared monetary system. China's currency has also become more influential as China's economy expanded rapidly and its global trade presence increased. However, replacing a global reserve currency is extremely difficult because financial systems develop powerful network effects. Network effects mean that the more a currency is used, the more valuable and convenient it becomes for others to use as well. Because so many international transactions already rely on the dollar, businesses and governments find it easier to continue using the same system rather than shifting to a new one. This creates a self-reinforcing cycle. The more the dollar is used, the stronger its position becomes in global markets. There are also major strategic advantages for a country that controls the world's dominant currency. Because the dollar sits at the center of global finance, the United States has significant influence over international financial flows. Many global transactions pass through American banking networks at some stage of the process. This gives the United States unique financial leverage in international economic policy. At the same time, the global demand for dollar-based assets allows the United States government to borrow money at relatively lower interest rates compared to many other countries. Investors around the world often view dollar-denominated assets as relatively safe during times of economic uncertainty. When global crises occur, money frequently flows toward the United States financial system rather than away from it. This phenomenon is sometimes referred to as the safe haven effect. Even when economic challenges appear, the global demand for dollars often increases because investors trust the stability of the system behind it. Technology and globalization have further strengthened the role of the dollar. International banking systems, global payment networks, and cross-border financial infrastructure are heavily integrated with dollar-based transactions. Many multinational corporations report earnings, price goods, and manage international accounts using dollars as their reference currency. This widespread integration makes the dollar extremely difficult to replace because entire financial systems have been built around it. Despite its dominance, the future of the dollar remains a topic of ongoing debate among economists and policymakers. Some analysts believe that technological changes, such as digital currencies, new financial systems, or shifts in geopolitical power, could gradually reduce the dollar's influence. Others argue that the structural advantages supporting the dollar are so powerful that it will likely remain the world's dominant currency for decades to come. What is clear is that the dollar's global role did not appear overnight. It developed over decades through historical events, economic strength, political influence, and global trust in financial institutions. Understanding why the dollar rules the world helps reveal how deeply interconnected modern economies have become. Money is not just paper or digital numbers. It represents systems of cooperation, agreements, and shared belief between nations. The story of the dollar is ultimately a story about trust, economic power, and the global networks that support modern trade and finance. If you found this video interesting and want to learn more about how money, economics, and the financial system really work, make sure to like this video, share it with someone who might enjoy it, subscribe to the channel, and turn on the notification bell so you never miss future videos. And if you want to keep learning right now, check out the other videos on this channel where we break down powerful financial ideas and global economic stories in simple animated explanations that can completely change the way you see money.